Perfect. All right. Well, um, today for our Trending Now Wednesday webinar, we're going to go over tax planning and basically setting yourself up for retirement and investing in yourself. It's going to be geared towards 1099 employees, primarily real estate and mortgage officers. So today we have Krista and Nathan on. They will take questions. You can throw them in the chat. You can raise your hand. We will do Q&A probably towards the end of each of their presentations. And this is meant to just help you going into 2023, hopefully with a better grasp on how you can handle finances. Being a 1099 employee, because that can be a little challenging. We don't always have a steady income. And then we don't have taxes being taken out of our commission payments. So this should be really good for everybody. I get these questions a lot as a broker. You know, what can I write off? How can I avoid audits? Things like that. So I am not a tax professional, but we have one here today, and she is going to talk to us about this and hopefully keep us out of trouble for coming into 2023. So good morning, Kristen, how you doing?
Good morning, I'm doing great, and thank you for having me today. Can you guys see my screen? I just want to make sure my slides are great.
Yep, we can see them. Perfect.
All right, so today I'm going to talk to you about really dressing your business up for success. Each one of you, or majority of you, are 1099. Therefore, you have a business, and it's a different way of reporting your income and expenses other than a W-2 employee. So just some of those things that we really want to go through each of you to dress that up. So kind of our purpose today is really to get your time, energy, and money back into running your business as a 1099 employee. And we're going to click through here. Like 90% of businesses fail in their first year. And Travis really kind of hit it on there. One of those big things is cash, and the cash to not pay your taxes is one of the biggest things that ends up bringing any sole proprietor down. It does become quite shocking at the end of the year when you got that big tax bill. Jaws drop on the floor, and so we're going to kind of help you get prepared for that. Usually you also see here about 70% of businesses fail in the second year. And that's, again, a lot of times certain mistakes just are not corrected yet to figure that out. So what we want to talk about today are, I'm really going to give you my #1 tip to success, and then 3 tips and strategies to help you along your year. You can apply these for 2023, and then I'm going to leave some time for Q&A. So I would like to say I have been in each one of your shoes. I've been in accounting for over 20 years, and about 12 years ago, I took that plunge of no longer being a W-2 employee to owning my own business. I started Guardian Accounting, Inc., and today I have 5 employees on my payroll, but I do work with many clients and help manage their team throughout the United States. And we do everything from payroll, business development, accounting, bookkeeping, CFO work. We are really striving to work alongside the business owner all year long to help them avoid all the surprises at the end of the year when it comes to preparing that tax return. So part of I would say the reason I got into accounting, my dad owns a construction company, and really, if any of you guys know of this industry, it's kind of like a feast or famine. So there are many days where I would come home and there's a brand new truck in the driveway, brand new TV, brand new living room furniture. And I'm like, Dad got paid. Woohoo! I mean, and we're eating steak and lobster on those days. But there also came a day where the IRS had showed up at our doorstep to say, hey, buddy, we're going to sit down and help you file these taxes. You haven't filed in years. And I really just wanted to make sure I never personally went through that where, you know, the cash was really burning a hole in my pocket. I like Nathan's more approach here, and you're going to hear from him of the long-term strategy of growing my financial wealth and ensuring in my 60s and 70s, no one is needing to take care of me. I've got what I need to do that. So Nathan's going to have some great information for you guys today as well. But each one of us do define success differently. And so you really need to look at how you define that success. Is your success saying, hey, I just don't want to live paycheck to paycheck? Or is that success, I want to have $5 million when I retire? You really have to approach your definition of success individually. And for me, it is doing what I want, when I want to do it, and how I want to do that. And I think that may be true for many of you, as you guys are all 1099 employees. You want to work the hours you want to work, and you want to do that how you want to do it. So with that, we're going to talk about my number one secret to success. And that is a big one, y'all. It is do not commingle the personal and the professional funds. And it is what I find many 1099 people, particularly in certain industries, real estate being one of them, that is a big inhibitor to them really being successful. You do need to treat your bank account as church and state. You need to ensure that you have a personal bank account and a business bank account. You do not want the personal funds coming through each one of them. And that will enable you in the long run, one, to really best identify what your business is actually costing you versus what you actually need personally, income-wise, to support yourself. So you will see within what we talk, it's also particularly really important if you become an LLC or an S Corp, because what you are doing then is piercing the shield of protection that you've created in one of those. So as a 1099 employee or as a 1099 individual, it's something that you do want to ensure you start immediately doing. Again, it helps you really identify what your business operation needs are, and you're able to identify what your personal expenses, cost of living need to be. So kind of want to share a story with you all about Sally. Sally is a real estate agent, and she is someone I just worked with this last year. She became an agent in late 2020. And as you know, 2021 was a phenomenal year to be a real estate agent. She was selling houses left and right. And then it came to the end of the year or the beginning of 2022. And she really realized she hadn't done any accounting for herself. She was very busy selling houses, and we all know how we get into that pace. So what she thought really, it was going to be super easy for her to get her 2021 taxes. She created a quick spreadsheet, dropped in all her income, the expenses that she thought she had spent, went off to get her tax prepared, and about had a heart attack. It was 3 times what she thought it would be in taxes. And honestly, she hadn't put a penny away to save for those taxes. I had met her a few times at a couple of networking events, and she came in and we had a discussion in my office, and I mean, she poured her heart out. I get that, for 30 minutes. And if you can't tell your accountant everything, who could you really tell it to? But within that, I was able to start asking her some questions to really start figuring out what other expenses she may have to start dropping that down. So, you know, one of the big ones that I usually find is many a times it is forgotten all the printing expenses. It goes to creating those flyers that you guys are putting out into those homes. That is one that gets overlooked. A lot of times, some of them do forget just about their cell phone. That is a business expense. You guys are living on that regularly. Tracking your mileage with different mileage apps, because you're continually going off looking at houses, and sometimes actually the mileage deduction would be better than the actual gas, but it's a matter of tracking it. One of the big things though I did find that was the issue with Sally is she had commingled like crazy. So not only did she have one checking account, she was running her personal and her business through it, but she was a heavy user of Venmo and PayPal. And so it was a little more costly for us to go back through and navigate all the personal expenses, you know, the cheers glasses and the, hey, thanks for the nail emoji. All different time or all different events that we had to go through and comb, still record as a distribution to her, but it was different, additional time and effort into really understanding what her financial picture was. We did get her wrapped for 2021. She saved a lot more on tax, but she immediately did go out to ensure she had that personal business account to run all her businesses through. And then for her, she chose Venmo to be how she pays for business expenses like the videographer and photographers, and used PayPal on the personal side. So with that, I want to say those top 3 tips for you here, or I guess that sums up my number 1 secret is do not commingle your asset, your personal and your business cash flow. It really will save you time, energy, and money when it comes to preparing those taxes. You're going to have a better understanding of what your personal expenses needs are and your business expense. Plus, when it comes to time to do that tax preparation, all the information will be readily available in one place for you on that. Now for our top 3 tips in understanding the first is understanding your cash flow. Deposits do not always equal income. And particularly when you are commingling your personal stuff, you know, your parents give you a Christmas gift of $2,000, or your girlfriend reimburses you for margarita night. A lot of the times when you are not properly tracking, you are picking all those deposits up as income. Because I bet you I will tell you the IRS will also. It's one of those things they look, everything that goes into your bank account must be income, and you're going to have to sort through and put those, pull those out. So be sure to be checking that what is actually coming in is income being derived from your business activity, not tax refunds or business loans or girls' night out. The next part we have is understanding your expenses. So one of those very quick ways where you start, the little things end up adding up, and Nathan will even let you know that's true when it comes to saving money for your retirement. Every little bit helps. Well, every little bit does help in making sure you pay less in taxes. So you really want to understand what expenses go to operating your business. So you need to take a kind of snapshot, write it down is what I highly recommend. List business expenses, use accounting software is even better, but you want to really know where you are spending your money. What are your marketing expenses? Do you have payroll, legal fees, office supplies, mileage? You need to jot down all the different areas in which you spend money and know and go through and look, do I really need this for my business, or is this a want for my business? So particularly when you are trying to save down the road for retirement or put more money in your pocket, there's a big difference between a want and a need. I want this gorgeous lamp next to my office desk, but do I need to spend the $500 to do that? I really want this brand new car. It is deductible, but do I really need to have this car as I drive around here locally? Those are the different things you really want to understand in your business to make sure you are bringing as much home as possible. I had shared an example a few months back. on this particular thing. We're at a marketing agency and they had a lot of office supplies and she was really looking how to save more money. But when she looked at her profit and loss, really couldn't see it. So what we had did for her is start digging into the details of what those expenses were, and quite a lot was spent on office supplies. Now, she does have a marketing agency. We are buying a lot of paper and reproducing, but what we ended up finding out is a lot of money was going out to Office Depot. So we start pulling up the receipts to that. And it was quite interesting to find you can get pretty much everything at Office Depot, including coffee creamer. So in this aspect, her team all had the flavor of their choice. They were spending about $500 a month just in snacks and coffee creamer, and realized quickly if she limited to just one regular kind and requested that everybody else bring in their own coffee creamer of choice, her costs were dramatically cut and able to put some more money away. So it's one of those things where you really need to understand where your money is going, because the little pieces do nickel and dime us to death. And I would implore you all, kind of look at your dues and subscriptions right now. Go through a month's charges and tell me how many of those you may not even actually use, but $5.99, $10.99, $12.99 a month, it does add up. And before you know it, you're spending $250, $300 a month in different online subscriptions that you may not even be using any longer, or find that value in what they are. So please be sure you're really understanding your expenses. And to do that, I would say make a list of your business expenses. You put them into categories and then provide a definition to those categories. Is this expense a want, or is this expense a need? As a real estate agent, I know you all are going to need your car to be operational, but again, do you need to be driving that Corvette? Different items are particular to each business. You know, a therapist may need to rent a location, but do they really need all of the Apple Music being piped in, or the magazine subscriptions, when we all know this is what we're looking at each and every day? So really understanding and defining those priorities for your business. And then my last tip is understanding your business operations, and that goes into the want and the need. We all got into business to make money. Do not be embarrassed of that. Do not be ashamed of that. So you may need to cut some expenses so you can do what you want with your business. Again, if I am a retailer, I may need that storefront, but I do not need to be in the nicest location to make that happen. So really just getting familiar with what you need and what you want to run your business so you are as successful as possible. Because what ends up coming is those taxes due at the end of the year. So in this, we talked about, to kind of wrap up, we have talked about the secret to success. Do not commingle. This is where it brings most businesses down, about 90% of them, just because of the cash flow issues it does cause. And then I provided the top 3 tips of running a successful business for the year. So then I kind of leave it with you all now for a Q&A for the next 5-10 minutes here. If you guys have any questions, I'm happy to answer anything in particular you may have.
So question I have, or that I get asked, is, let's say first or second year agent, they're just starting to get a couple sales under their belt and they want to know if they should set up an LLC right away. So what's your take on that?
It does pertain for different areas. An LLC is not necessarily needed in year 1, 2, or 10. It is honestly, what do you personally need to protect in that? The LLC is another layer of tracking, another layer of tax reporting. But many a times that LLC is still a single member LLC, and that income is going to pass through to you individually. So tax wise, you're not protecting yourself any different. You're not going to pay any less, other than now you're going to be under more regulatory. But the LLC does provide some limited protection to your personal assets. So you really need to step back and say, is this additional government regulation, additional tax preparation, additional tracking really needed or not? And it depends on the person individually. You are not going to, it's a single member LLC, you're going to be taxed at the same rate. So there's no tax savings to that. It's more of a personal protection for that limited liability company.
So it sounds like most should just get the separate business account and run everything through there.
Absolutely. Whether you're a sole proprietor.
I think they try and do both. They think that they have to run it through the LLC, but in fact, we could just go ahead and get the separate business account and run everything through there instead.
Correct. It's free to go get. What I recommend then is you register with your local area as a DBA. So Krista Beavers, DBA, Krista Beavers Real Estate Agency. And that is where I start doing all of my business activity through that business account. And that then separates that. You do not have to have the LLC to do that.
Awesome. What other questions do I get? So I get that a lot. So again, someone starting out in the business, maybe they're coming from a salaried position or something, and let's say their goal is, I want to make, an equivalent income this year. That's my goal. So how would you suggest they pay themselves or run money or save money, or what would you think would be the breakdown so that they can space things out in a way? Because what I see is they get a commission, and then they're not used to, it's triple what they used to get in a month, but then they don't have another sale lined up for a couple months, but then their spending habits don't change much, or they go and they buy that $500 lamp or something like that. So what would you suggest for discipline so that they can build their business gradually as they go with not having a paycheck every single month?
Well, I find usually it's this time, the first of the year, they end up hearing what that tax bill is, and they need to hurry up and sell a house really quickly to save on that tax bill. I recommend to any business that is starting out, whether it is real estate or going into a different field, once you're going out on your own, at least a minimum 30% of everything that gets deposited in gets put aside for your taxes. We don't know what that full picture, you being married and your husband has a W-2 versus being a single individual, each of that changes your tax bill at the end of the year and how you can adjust. But the best way to protect yourself is to put 30% of everything that gets deposited into the bank off to the side. And if you need to, create that separate tax savings account, either at the time of the deposit or the end of the month. That enables you to get through year one with no big surprises on the tax bill. If you end up not owing that 30%, great. That money is yours and you get to take it as a bonus. From there, everything else after that 30%, another 50 should stay in the business to help you operate at that. And then the other 50 becomes your revenue. So if you end up wanting to make more than that breakdown there, you know what you have to do. You either have to bring your expenses down so you can take in more, or you need to sell more in that commission to bring home what you want. So if you start with those three things, just to start with, a business account, put 30% off the top away for savings, and then out of that 70, you keep 35 and 35, you'll end up setting yourself in that first year. After that, you really start understanding your business a little more, the little things that pop up, and you start seeing what you really need to bring in to operate. And maybe you have to get a part-time job for a while if you're not being able to make those commissions every day. But you may be able to take this off right at the top for success. And here comes tax year end and you've already got the money set aside to pay that.
Awesome. Yeah. So you would recommend a business account with a business savings account, and then just have the discipline. Okay, I got paid. Boom, that's over there. Not even going to look at it. Pretend it's not
Yeah, a lot
there.
of sight, out of sight, out of mind. So if you put
Yeah.
it over, and in that, I really do recommend to set that habit, make it be at a different bank. Something that you literally need to walk in to pull that money out. It depends on your habits. Some of us just will see it over there. Oh, I could do this and I'll pay it back. And before you know it, that is drained. So a lot of times if you just go to a different bank, you've got to physically walk in and pull that money. It's a lot harder to do that. You'll find after year one, depending on your personal situation, you may only need to do 20% at the end of the year. Or you're at 45, that normally doesn't happen. But that first year, you're not going to get any surprises. And it's already set the habits for success for preceding years.
Yeah. Okay.
Krista,
Last question.
You have a question in the chat, Krista. Any apps or tools you can recommend to use?
I do on a couple. First off, if you guys are not using any kind of accounting software, I highly recommend that. QuickBooks Online does great. There's QuickBooks Desktop. That really does enable you to see those little tiny things that come through. Mile IQ is a great app for tracking your mileage at where you're going. Many real estate agents just try to pass through all the actual expenses, but you may find that actually tracking your mileage to where you go is a better deduction. And within that, you get the repairs and maintenance. And honestly, right now, the mileage rate is quite high with the IRS. It does change regularly. So that's something I highly recommend. And those two alone can save you a lot of money at the end.
Cool.
You have time for another question? I'm sorry, I'm sick, so my voice is kind of giving up. I do have an LLC for, I own some properties, rentals. So can I combine my LLC with also the sales of a property? Can I use that same LLC? Did you recommend that or no?
You could combine them, but I do recommend keep them tracked separately. So if the business owns the rentals, then it could all flow through. But by not tracking them separately, you will quickly go into that commingling.
Oh,
You're
that commingling.
find out if your properties are covering themselves or if your real estate company portion is going through. Segregating that will allow you to quickly see, hey, I've got a lot of repairs and maintenance on this property, or I may not be charging appropriately, or my management company is really costing me a lot. If you run them all through, you still need to be able to separately track them. And I would highly recommend it, you get some assistance in setting that up or outsourcing that if you start combining those all into an LLC, because before you know it, you could be hemorrhaging cash and not know which it is, if you're overspending on the real estate or you've got an issue on the properties.
I see. Okay, well, thank you so much.
You're welcome. Well, I think my time is up. Feel free to drop any questions that you may have in the chat, and I'll keep an eye on it while Nathan presents. And thank you all very much.
Thanks a lot. That was super informative. And I'm glad we're recording this, because next time agents ask me, I'm just going to ask them to watch the webinar.
Here's a video.
Yeah.
Watch the video and then ask any questions after you're done.
Exactly. Yeah. No, I'll probably just refer them over to Kristen. So, okay. Next up, part two. We have Nathan. Nathan's in financial services, and the second part to running the business is, how am I going to exit the business, right? And so we don't want to sell real estate forever until we're in our 90s. That makes for a pretty rough retirement. So I'm sure everybody has the goal of retiring. Yes, you can do that in this business. I see lots of people do it all the time. 20, 30 years in the business, they fully retire, or maybe they semi-retire. And the ones that semi-retire usually, I don't know, maybe they've made good steps and they just like selling real estate and having a little extra cash, or maybe they're kind of winding down and they haven't saved up enough yet. So let's see how we can fix that issue. And so we all are in a position to retire when we want to retire.
Yeah. And I tell people the secret to a great race is you got to know the starting line and the finish line before you begin the race. And so that's really what our job is. And planning is knowing that when people come to me to talk about savings, the two single biggest challenges they have is either, hey, I don't have enough money to save, or I keep saving, but taking it out for other things. So what I want to talk to you about today is just how important it is to invest in yourself. I'm gonna share some stats with how we got here and some of the challenges we're facing. I'm gonna share some insight to give you tips to make sure you can get on the other side and accomplish whatever goals you want. As we go through it, ask questions. You can open up and ask questions on speaking. You can raise your hand or you can put it in the chat. This is extremely informal. All of my contact information will be provided. So if there's a question you don't want to ask on here, feel free to call or text me or email me any questions. My goal today is really simple. I want to either remind you of something you already knew, reinforce a concept that you've been working on, and now you have the tools to go forward with it, or reveal something that you're hearing for the first time. So what are we talking about? Well, the traditional view of financial planning and savings is that, hey, in the beginning, we earn our income, we have no complications or trouble along the way, and we get to the end and we achieve our results or we achieve our goals. The reality is life is not simple and finances are not simple. And this is what most of our lives look like. We start a business, we leave a business, we have kids, we buy a house, we have student loans, medical emergencies. There are so many things that are vying for our dollars and vying for our mental time that it's almost impossible to sit down and focus on what our financial goals really are. And then you couple that with the external forces of market fluctuations, greed, regulations, people are overworked, underpaid, entrepreneurs are burned out and unsupported, and we're having to do it all on our own. We no longer have the pensions to rely on for retirement. Today in the United States, we are also bombarded with these images of these lifestyles that we're supposed to be living. And so we put ourselves in debt and we stress ourselves out trying to drive the Corvette that Krista mentioned, or live in the house that, the 7,000 square foot house, even though we're only sitting in the same 500 square feet of it every day. And it's just adding to our anxiety. What does it look like today in the United States? 50% of American households are living paycheck to paycheck. Nearly 7 in 10 Americans have less than $1,000 in savings. And the one that scares me the most is almost half of Americans would need to borrow or sell something to meet a $400 emergency. So that's what we're up against. The reality is we are now in a place where we're looking at our future and we're looking at passing assets on to the next generation. And there's a verse that says a wise man leaves an inheritance to his children's children. And this is quite possibly the easiest time in history to create that inheritance, to create that wealth. Yet once again, it's the hardest time to keep it because we have so many places we can spend it, whether it's an upgrade to our phone, whether it's new technology to make our businesses better. There is no shortage of places to spend our money. In fact, we are hearing over 4,000 marketing messages every single day, either consciously or subconsciously, asking us to give up that dollar. And that's what we have to fight against. Right now, we can look at all these zeros here, and this number is $68 trillion. This is the amount of wealth that's expected to exchange hands over the next 25 years. What's startling about that is that 70% of it will be lost by the second generation, and almost 90% of it will be lost by the third generation. Simply because we're passing on the dollars, but we're not passing on the wisdom. Or we're working hard to accumulate it, but we're not showing our children and our grandchildren and our nieces, our nephews, the work that goes into it. So when they get it, it was kind of easy come, easy go, and then it's out of sight, out of mind. So we want to focus on the simple concept of investing in yourself. I wouldn't be a good advisor if I didn't use at least one acronym in a presentation. So this is the one I'm going to use, INVEST. And so what does that mean for us? The I, for every single one of us as business owners and entrepreneurs, we need to take a regular inventory of our current financial situation and our future goals. Our goals are changing every single day. Our financial situation is changing every single day. So we should take a regular inventory of these things. What assets do you have available to help you accomplish your goals? Whether that's your real estate portfolio, your investments, cash, jewelry. What debts do you have? Who do you owe? and how much do you owe and what are the terms of the debts. Right now, people are reevaluating all of their financial obligations and debts because interest rates are changing and cash is sitting in cash and you're losing money on interest. So you want to evaluate your debts, say, does it make sense to start paying down some of these debts, or are there finances, or do I have long-term loan money that I can lock in because the rates aren't going to stop? So should I buy that house now at 6% because it may go to 10%? We don't know, but you should do a regular inventory of your debts. And then lastly, pull a copy of your most recent credit report to make sure your credit profile is as clean as it can be. We talk about putting fraud alerts and freezes on every single credit report. A fraud alert simply says, hey, I think I may be a victim of credit fraud. So you're burdening the credit bureaus to double check anytime a request for credit is extended. So I keep fraud alerts on all of my credit profiles. I have to update them every 90 to 180 days. But what that does is that if somebody applies for a credit card, the creditor issuer has to verify that it's me. And if it's not me, then they turn down the application. A freeze is if you do not need to buy anything whatsoever, you can freeze your credit to where no one can apply for any credit. So if you don't plan on using your credit for 12 to 18 months, put a freeze on there. You don't have to worry about it. To me, the freeze is a little bit of a headache. So I like the fraud alerts because it still allows me to do what I need to do. And for those of you who have young children in the house, when I say young children, really up to age 25, make sure you're pulling their credit reports as well. Because one of the most common credit profiles to be stolen is that of young children and young adults, because they're not needing their credit as often as we are. And so these crooks are stealing their identity. They're charging up these accounts. They're making minimum payments on them so the flags don't come up. And then 18 years goes by and your kid goes to buy their first car and they realize they have a $40,000 Visa bill that's outstanding. So make sure you're pulling the kids' credit reports on a regular basis as well. The N in invest is your net worth. It's simply what you own minus what you owe equals your net worth. So as you're looking at building your financial well-being, always use your net worth as the barometer for your growth and your success. You may say, oh, I'm not really saving that much. I'm only putting $100 per month into my savings account. Well, you're increasing your net worth by $100 every single month. So don't get caught up with the balance of your portfolio or the value of your property. Do an assessment every 6 to 12 months of your net worth so you can see the trends and the trajectory of your net worth to make sure you're going the direction you want to be. Value, the V simply says before making any purchase or investment decision, ask yourself one simple question. Does it add value to my life or the lives of those around me? Many of our purchases, and I'm no different, I've made the impulse purchases. Many of our purchases provide a short glimpse of joy. And then as soon as we make the purchase, we don't use it anymore. We don't have any excitement any longer. If you want to make sure that you're saving for the future and you're building up your net worth and you're growing your retirement portfolio, use this one rule to say, if it doesn't add value, then I'm not going to buy it. Pretty simple. And then that will take away most of the impulse purchases. The E in invest is your expenses. Krista spoke to this, but we want to make sure that our expenses are appropriate. There are a lot of phantom expenses that are taking our dollars away on a monthly basis for products and services we're simply not using. So while often necessary, expenses can be the enemy of your financial well-being. Keep your expenses in check, review them every 90 to 180 days, and eliminate those phantom expenses. I shared with the group a few months ago that during the pandemic and the lockdown time, I had a chance to review all of my expenses. And I've been a 25-year customer of my cell phone company. And so I called them up and I said, hey, I saw this promotion that you're offering new customers. I would like to take advantage of it. And they're like, Mr. Moore, sorry, we can't do that for you. It's only for new customers. I said, okay, we'll cancel my service. They put me on hold, and 10 minutes later, I was saving $80 per month on my cell phone bill that I had been paying, no questions asked. And so now that frees up almost $1,000 a year, and then the light bulb goes off. Who's next? Now I'm on the line with my cable company, save $40 there. So just because we're paying these expensive and just because we can afford to pay them doesn't mean we need to be paying for something we're not getting the value out of or not utilizing them. So right away, just 2 phone calls saved me $2,000 per year in things that I was paying for already. How many expenses do you have in your life that you're just paying for mindlessly that you can free up dollars that can then be used to build out your admin support for your real estate practice, to build out your own real estate portfolio, to dedicate those dollars to your marketing or your accounting services? You got to free that money up. It makes a world of difference. Saving
I
strategy.
love that point, if I could
Yes.
just interject,
Please.
because that's a pain point for a lot that I hear is I don't have the money for extra marketing and things like that. But I did the same thing, and I'll go through my account usually 2 or 3 times a year just to see what I'm paying for, subscriptions, things like that. And I'm like, $15 here, $30 there, saving on the cell phone. We did the same thing. We switched carriers because they wouldn't discount. We realized that even we dumped our cable and we're just straight streaming services now, because almost everything we were watching was on either Netflix or Hulu or Paramount. And I'm like, why are we paying for cable? Let's get rid of this, you know? So we freed up hundreds of dollars a month, just by doing that. And that can go straight towards marketing. I mean, what, $300 a month or even 200 or something, if you're spending nothing on marketing right now, could be a game changer in your business.
Yeah, and in financial services and real estate are very similar in that when we're starting, we usually buy everything that they say can help us. And so many of my phantom expenses came from industry related tools and softwares that I subscribed to and which was not using. And so I go through, even from a business standpoint, to say, okay, if I don't spend the $100 on this one, perhaps there's a more effective or more efficient one that I can spend that $100 on, then that's a good use of those dollars. Saving strategy, we need to establish an investment and a savings habit. The hardest thing to establish is a habit when you have variable income. I get it. You know, I know what it's like to, have a big feast and then weeks of famine. So we got to create a habit or a system that no matter what's going on in your financial life, it can be consistent, and then you can add to it from time to time. So I tell people, start with a number you can comfortably save for a minimum of 6 months. Once you can comfortably save that number, then you slowly start to increase it and increase it. For many, it might be as simple as I can afford $25 per month right now without adjusting it. After 6 months, you won't miss that $25. Then it's going to bump to $50. Then it's going to bump to $100. When I look at my clients today, some of my wealthiest clients in our client base have never made more than 50 or 60 grand per year, but they were saving $1,500, $2,000, $2,500 per month because they kept their expenses down and they slowly ratcheted up their savings to where it didn't affect their lifestyle anymore. So when we talk about savings, you want to make sure that, for example, as real estate professionals, even loan officers, start with a percentage of your income as a baseline savings goal and just simply say, okay, for every property I close, for every loan I close, I'm going to put 5% of it away, 10% of it away into my savings. Because even though the number may fluctuate, the percentage is not. And one of the tools that we have available to us as business owners are we have tax preferred or tax advantage accounts available that typical W-2 rank and file employees do not have. I have 4 here listed. There's just 4 of many, but everybody can do the traditional IRA and the Roth IRA, which allows you to put away $6,000, $6,500 per year. But as 1099 entrepreneurs and self-employed individuals, you can actually use a SEP IRA, which can allow you in 2023 to put up to $66,000 away pre-tax. So you want to talk about having a tax savings. You know, if you have a great year, what better way to celebrate that great year than taking $66,000 off of your taxable income and now freeing up $10,000, $12,000, $15,000 of tax dollars you would have paid, but now you don't have to because they're deferred out of the retirement account. So wherever you're at in your practice, consider setting up a savings strategy, but also consider setting up a retirement strategy to take advantage of these retirement savings vehicles. Even a 401k, there are single or uni 401ks that can allow you as a real estate professional to have a 401k plan for yourself without all of the added expenses. If you don't know about it, I know many of you like to invest in real estate outside of just working with your clients, but your own portfolios. There are saving strategies that can allow you to use your IRA accounts to buy real estate property in your own personal portfolio, but you can only do it if you have enough in there when it's time to make those purchases. So you want to start the saving strategies now. Just a little highlight down there. If you wanted to set any of these up, you can still, for 2022, you can still set up a traditional IRA, a Roth IRA, and a SEP IRA, all the way up until you file your tax return, the first filing date in 2023. So you have time to still, if you get to December 31st and you're like, oh crap, I made all this money and I didn't put enough away and I have this big tax bill potentially, there are strategies that you can do to mitigate some of that. Even though the year is over, you have up until you file your tax return. The 401k is the exception because it needed to have been set up by October of this year to defer dollars for this year. And lastly, you want to, the T in investors, have an effective timeline or take time. Establish a realistic timeline to accomplish your savings and debt reduction goals. The biggest challenge I see people have today is they have unrealistic expectations as to how much they want their savings account to equal at the end of the year, or they have $50,000 of debt and they want it all paid off in 2 weeks when it was accumulated over a 2-year period. So whatever you're doing, just really take the time to say, is this a realistic timeline? And the old adage, slow and steady wins the race, is never truer than it is when it comes to your financial goals. There's a saying that if you take care of the dollars, if you take care of the quarters, the dollars will take care of themselves. You put away a little bit at a time to have more later. So you have that option to retire or slow down or modify how you do business, but you get to do it all on your own terms. So as you're thinking about what you want to do for your goals for 2023 and beyond, this acronym INVEST is something that you should be looking at on a regular basis to take yourself through the inventory, the net worth, the value evaluation, expenses, saving strategies, and the timeline to make sure you're on track. Once again, if you have any questions, I know a lot of this is situation specific. So if you have any questions, you can call me or text me at the number that's listed there, or you feel free to email me if you have any other questions, but I'll open up the floor to questions in the chat or open dialogue.
I like the retirement accounts because I think a lot of 1099 earners go straight towards what can I write off to, not pay so much taxes. When in fact, if they had some of these accounts set up, that's an even better thing than the write-offs. It could be in a sense, So because you're putting away money and it's tax deferred, is that correct?
Great point, Travis. That is a great point, because this is one of those ways that you can reduce your taxable income, but invest in your future. And definitely need to speak with a financial advisor, because I do find many construction companies immediately go out and, I'll just buy a new vehicle and I get to section 179 it. Well, did you really need that vehicle? They could be better served in their future setting up a profit sharing plan or 401k plan that they're investing down the road, save on that tax now, but really set themselves in the future. I highly recommend tax planning and financial advising.
Yeah. Okay.
Yeah, early on in my career, all my friends would go out to lunch and they say, oh, you get to write it off so you can cover lunch. And I'd have to remind them that that's really just a discount. And that's assuming that we talk business. But the second that expense is over, I have nothing to show for it because it's consumable good. Whereas your retirement account is really preparing yourself for the future to make sure if we don't have pensions, we may or may not have Social Security available, you can know that you're going to have a dollar that you can turn on at any point to create an income to either give yourself the option of retiring or slowing down or investing in other assets.
So instead of looking to spend money to have a write-off, just open up a savings account.
Correct. Yeah. Yeah.
Instead.
Every dollar that we spend, and then we're not always good at it, but my question to myself is, what's the return on this investment?
Yeah.
And sometimes it's a loss. If I'm going to the movies, I get mental return, but sometimes it's a loss. But we should be evaluating every dollar, and the goal is to have as much of positive growth as possible, which is where the investment accounts come from, which is where the savings accounts come from.
Yeah. Cool. Any other questions before we wrap up? I know this can get a little personal with, finances and things like that. So everybody has their contacts posted. If not, we can get them to you if you want to talk individually, more personally, not over a public webinar. That's totally understandable as well. So thanks, that was super informative. I'm really glad we did this webinar. I think the timing was really good too for the end of the year, as everybody's kind of starting to think about this stuff and looking at the expenses and maybe even stressing about what their tax bill might be. So there's still time to correct it. So give Nathan or Krista a call, and I really appreciate you guys coming on. This is awesome.
Thank you for the invitation.
Appreciate it. And yes, feel free to reach out if you guys have any questions on today or any other information. And I know Nathan's the same.
All right, awesome. Well, hope you have a Merry Christmas and safe New Year and an awesome 2023.
Merry
Same to all of
Christmas.
you.
Thank you.
All right. We'll see
Bye.
you.